Look, I know so many traders out there probably have a hard time trading supply and demand and can't really grasp it, all right? When looking for key setups, within the market, we're talking about high probability setups, okay? So, look, you have to really focus and take the time. Stop being impulsive. So many traders have a problem with wanting to always be in a trade. You cannot always be in a trade. You have to be more patient than anything. I tell people all the time, if you do not have patience, this is not the business for you. I'm going to tell you right now, all right? First and foremost, if you're unable to be able to read market structure, understand what's going on overall in the market is always shifting around. It's either pushing higher or it's dropping or moving pulling back and then pushing higher again. You have to really be able to see at any given point if the market is turning the tide and making a reversal. So please stop being fooled by false setups, okay? And pay close attention to the best high probability supply and demand setups. It is key, all right? I'm going to do a rundown on a trade that I took yesterday evening because I think the more that I pound this information and push it out there, because I'm not one to beat a dead horse to death, but I do know that people learn at different paces, okay? And especially when you are trying to shift from something that you may have learned in the past or learning now, and then you're trying to shift over and learn something else at the same time. Look, that is probably your problem as well. You cannot learn 2 and 3 different things when it comes to trading, meaning 2 and 3 different strategies, and trying to see which one is better than the other, or trying to merge strategies together. Now, sometimes people are able to tweak a certain strategy and maybe couple it with their own. That may work, okay? But for the beginner and our new trader out there, please, if you are trying to learn something new, okay, undo or unlearn what you learned before. Meaning, if the strategy that you had learned before is simply not just working out, stop trying to hang on to it in your brain, all right? I did a video way back when, some time ago in the past about decluttering. Look, I was in that same boat. I know, okay? It did not click for me until I was able to understand market structure in full. That's when I was able to shift and say, now it's time to learn a solid strategy. It's not about, understand, trading is not all about just learning a key strategy, all right? You have to do something before that, and that is understand market structure. It is extremely and critically important if you want to survive in this business. If not, you're going to continue to pour tons and tons of money into the markets, and you're going to watch that ship sink, meaning you're going to lose a lot, okay? So what I did was I stopped well ahead. When I started losing little bits at a time, all right, I stopped. I did not want to blow my account in full. So what I did was I went back to the drawing board. Everything I had learned, I did away with. Everything that I had written out, I did away with. Meaning all the bad juju or stuff that I learned, I did away with it. I started from a clean slate, pure naked charts. Pure naked charts is what I focused on, all right? And then once I was able to read market structure, I said it's time for me to learn a strategy that would possibly work for me, okay? And that's when I fell in love with supply and demand and built a strategy around that, okay? So now I'm looking for setups, which are high probability setups in the market that 100% makes sense to me as a trader. I always hear people or traders say this: I took a trade at a demand or a supply zone and it didn't work out. Let me tell you, just because you took a trade at a supply and demand zone, or demand zone, I should say, it's not always going to work out. One thing that you have to understand if you want to be a trader is that even at the most highest probability area, it may not work out. We as retail traders do not drive the markets. Understand that. You simply have to be smart about your entries and just take setups that make sense. Ones that are, yes, high probability setups. Okay? All right? Let's say you take 3 of them. 2 of them work out and 1 didn't work out. And sometimes you may say, sometimes you get lucky in 3, you get 3 for 3. Even I get into trades, okay? And take, I'm not saying large amounts of drawdown, but I do. There's times when I get into trade and the market comes back against me, but I try to stay in my trade at just as long as price does not come down to an area that I have identified mentally as a stop placement or stop loss for me. Okay? All right? So you have to have and know what is your own personal thresh. Okay? That you are willing to place a stop loss at, whether it's a hard stop or mental stop, in order to get out the market. Okay? What happens is lots of people just, they either remove their stops or they allow price to come way past an area where they know they should have gotten out of the market, and then they start punishing themselves, and then they blow their account. You have to be able to follow a systematic way and follow your strategy that you have written down, hopefully, that is part of your trading plan, and stick with it on a daily basis. Okay, and so people always ask me, and I say people, I'm talking about those that are basically looking to learn how to trade the right way. Okay, maybe want to understand the strategy and how I trade. Look, it is simple, and I will always try to keep what I do in my trading simple. I just have a couple simple steps that I follow. And as long as I follow them in each setup that I take, I'm good, okay? Because one thing rests for sure, I've taken the trade hopefully with very minimal risk, and I'm practicing great trade management when it comes to knowing where I need to get out of my trade at. And if that market comes back against me and it's past my thresh, I'm out, okay? I'm not going to risk any more capital. You have to understand and be smart like that. I see too many traders, they stay in a trade with what? Pray and hope that the market's going to turn around. All right? You keep playing this game like that, and you are going to burn. You're going to get burned very badly. Okay? So, with me, my strategy, it consists of a breaker structure. Number one, I need to see, primarily if I'm trading strictly off of, say, the 12 range chart, I want to see, or any particular chart, it doesn't matter what chart you're using, you know, or what chart style, if you're time-based or volume or tick, it doesn't matter. I trade range charts, but when it comes to breaker structure, all right, I want to see, I mean, in a breaker market structure, I want to see either a new high being created or a new low being created. And within that area, when it breaks structure, I want to see either a demand or a supply zone being created as it's breaking and making a new high, breaking structure, or breaking structure to the downside, making a new low, and that's going to be, you know, within that area to be some area of supply. Okay. Number two, I always want to see I just said that, a pullback to a demand, to a supply or demand zone. Okay. But with that, I also want to see an imbalance. Okay, back at either the demand. So if we're breaking structure to the upside, meaning price is making a new high, before price breaks that area of structure, it's going to create an area of demand, you know? And one of the key things I look for to see, is there an imbalance back at that area of demand? And then reverse, if we're moving to the downside, price breaks structure, makes a new low, you know, we're creating an area of supply within that, say, swing to the downside that broke structure and made a new low. Is there an imbalance at the area of supply? Okay. Now, once we have retraced, then I look for a retracement back to that area of demand or supply. I'm looking for, at that point, a what? A rejection. Everyone that follows the channel and is part of the Discord and has subscribed to the YouTube channel and has watched the videos understands what I mean by a break of a candle in the opposite direction. Yes, please take the time to watch the videos and you will grasp an understanding of what I'm talking about, okay? Number four, what I must see. Okay, well, not what I must see. Once the rejection happens and I'm in the trade, at that point I'm really looking for price to start feeling some imbalances. Okay, so prior to me getting to a trade, I'm looking to the left-hand side of my chart, either up or down, to see if price, once I'm into the trade, it's going to start, you know, I'm starting to gauge, I'm starting to mark areas where there's imbalances where price should, you know, hopefully fill, okay? As it's either moving back to the upside after price has tapped into an area of demand, or moving to the downside as price has tapped into an area of supply. It's very simple, but at the same time, there's a systematic way of going about it, okay? So I'm going to give a rundown just here now in this video in regards to a trade that I took in the overnight session, okay, yesterday evening, all right? Just to kind of give you a rundown. Now, take a look here because I'm using my 24 range chart and I'm going to show you an area of demand, okay? Now, what I noticed here was what price was making lower lows and lower highs here, okay? Now, right here, when price broke higher here, okay, this was on the 12th, there was an area of demand that was created towards the close of the day, meaning aggressive buying. That's what demand is, to the upside. It breaks through this area here. It takes out this high right here. So you see this swing to the downside, then followed up with a lot of aggressive buying to the upside, okay? This is a demand zone, okay? So what I did on my 24 range chart, I marked that. And in yesterday's trading session on the 16th, price retraced back to the zone. And now at this point, I'm not looking to take an entry off of this chart, okay? It's basically a top-down analysis approach where I'm using paired charts to help me get into a trade. So I want to see, first of all, something happen on a higher time frame chart, say for instance, okay? Now in this case here, the 24 range, we got this demand zone right here. Price moves into it. Now what I'm going to do is I'm going to scale down to a lower time frame, which is primarily my my entry chart, the 12 range chart, okay? I trade range-based charts, okay? So please do not ask me why, because I've got that question a million different times, and it's just simply for the fact is that they are cleaner to the eye to me, and that is my preference to trade, okay? All right, so here it is yesterday. Let's see, right here. Okay, so price, imagine this is the zone right here, the 24 off the 24 range chart, because this is the zone, okay? Now, what I'm looking for, this was that pullback to the zone that I just showed you, all right? That demand zone right here towards the close of the market yesterday, okay? Now, when I scale down to my lower time frame chart and we've already tapped into this higher time frame demand, what I want to see on my lower time frame here on the 12 range chart was, for one, was there a break of structure on the lower time frame? Yes, there was. Price broke structure when it closed above 41.28.5 right here, okay? Broke higher. Break of structure right here, okay? But I'm also noticing that we also tapped in that area previous to, okay? Right here, price still leaving it in balance when it broke structure right here, pulled back to it on the 14th. So the zone is already tapped here, but that does not mean that price will not reject that area again. But is it a high probability area at that point for me, a zone? No, it's not, because I want to see an imbalance. If there is a imbalance that was left behind, okay, when price pulls back to this zone that I showed you on the 24 range chart, if there was still an imbalance there, then that would mark it as a high probability zone for me, all right? But being that it wasn't, I mark it as, in my mind, as a lower probability zone that price could possibly still reject it. Indeed, it did, okay? But, so what I did at that point, I said, okay, now we are pulled back to the 24 range demand zone, okay? Demand zone, all right? And we broke structure here on the 12 range chart, okay? And we pull back to this area of demand again on the 12 range chart. Let me scale down just a little lower to see if there's going to be a break of structure to give me even more confirmation or confluence to be able to take a trade. But before I do that, I'm looking here at my 12 range chart and I'm saying, okay, well, if we do get rejection or price shows me a break of structure on the 4 range, where could price actually go to, you know, at a minimum before it may want to bounce, okay? Reject. Well, I'm looking right here to the left of my chart right here. Once we get into that zone, I'm looking to the left, looking up, okay? I see we have an imbalance right here, an imbalance here, here, and right here, okay? So now I'm going to scale down to my 4 range chart to see if I can gauge a base or see if a break of structure forms. So at that point, if I get it and then get a pullback to an area of demand on my 4 range, then I'm going to go long and take a trade back up to where? At least 33 3/4, 33 1/2, okay? To fill in the gaps right here off of the 12 range, all right? So let's scale down, all right, down to the 4 range chart. And that's going to put us in this same area. Imagine it right here. This is off the 12 range chart. This is what it looks like on the 4 range chart. Now, price breaks higher. Makes a high, higher low, small little swings to the upside. And then we get a break of structure above 41.26 3/4 or 41.26 1/2. Now, once we get the break of structure, what's the next step we're looking for? We're looking for a pullback to, in this case here, because we're going higher, demand. All right. So I'm looking for a demand area that aided in the break of structure here on the 4 range. Where is the first area? Right here. Okay. Right here. Let's just mark this small little area. Mark it here, right here. Okay. And we got to, when price broke the area structure right here, left behind an imbalance. Okay. Price pulls back now to our demand zone on the 4 range chart. Once I get pretty much, at this point here, because we have an imbalance on, we've done a top-down analysis. We use paired charts, and now we're on down. We've actually scaled it all the way down to the 4 range chart, and we got a break of structure on the 4 range. And I see that we have imbalances that I just showed you on the 12 range. Look, I can get in aggressive, or I can wait for the break of the candle in the opposite direction, as I mentioned in my step-by-step approach as part of my strategy. Okay, price pulls back to the zone. All right, once I get the break of candle above the last down or red candle here, meaning this green candle right here takes out that last red candle that made the final move to the downside, I'm golden. I'm going in at 41.25 3/4. I actually got in at 41.26 and 1/4, just a little late on the entry yesterday evening. But look, it goes exactly where I said it was going to go, because it wanted to fill all these imbalances right back up here. Okay, all these imbalances to the left hand side of the chart. Look what it did. It went all the way back up and filled those imbalances. Okay, fill those imbalances back up to this area here. And if you look, as I said, where, well, in this case here, it pushed up to 31 3/4, pulls back. Okay, what does it do? Well, take a look here. It pulls back to a new demand area right here. Okay, why you say that's demand? Look, on the 4 range, pushes higher, pulls back, boom, break a structure above this area here, above 28, pull back to a new key area of demand, and then continues pushing higher and goes all the way up there to almost 34, just as I showed you on the over on my 12 range chart. This setup, this entry, I posted it on our Discord community, that trade I took. If you are interested in joining our Discord community, I highly recommend you do so. Find the link down in the description portion of this video. That's all you have to do. Click on it and invite yourself in. Okay? That's it. Now, if you're someone that's interested in maybe getting further information about my trade breakdowns, or a video playlist of videos that I pretty much hand selected and put together that will help you or aid you in my style of trading, then I would recommend you go over to the YouTube homepage channel. Let's try that again. My channel, you'll see a link that says membership. Click on it and then go down. There's 2 tiers. You can click on the one that says elite membership. Most everyone who has signed up has selected the choice of the elite membership, because they get the trade breakdowns, the video playlists, things like that, that help them get a grasp and understanding of how I trade. Because I basically break the trades down as if you were sitting next to me or virtually, just so that you get a better understanding of what I was thinking as I was taking the trade or leading up to the trade. Okay, but again, how much is it? $6.99 a month. Okay, for the trade breakdowns and for the video playlist of videos. Okay. Again, those are hand selected videos that I feel like are ones that are pertinent and provide the most information. But the trade breakdowns definitely help. Okay, they definitely do so. $6.99. We're talking about a month, not weekly, not daily, a month. Most of you guys spend that in a cup of coffee daily. Okay, so $6.99 a month. Well, I would sure that and hope that it adds some value to, or helps you out in your trading. I mean, what do you have to lose? I mean, we're talking about pennies on a dollar versus, the kind of money that you could possibly make if you understood and learned how to trade correctly. You do not have to trade like me, okay? I'll say that again. You do not have to trade like me, but this is how I trade in my strategy. I appreciate everyone tuning in and watching today's video. And look, stop being fooled by what's going on in the markets, okay? These, false movements. Take high probability trade setups, okay? supply and demand is to me, the golden ticket. Okay, so it's your choice to either follow it or not, or take heed to it or not. That's up to you. But again, I appreciate everyone who's tuning in. If you have already subscribed, thank you for doing so. If you have not subbed to the channel, I would recommend you do so, okay? Simply by clicking on the sub button down below, okay? Subscribe, that big red button. Next to it, click on the bell and turn your post notifications on. Not just one, turn them all on so that you never miss one of the uploads here on the channel. As well, if you find value in the content here, I try to make things as simple as possible. Please smack that thumbs up button for me, that like button. I appreciate it, guys. I'll see you in the next video. Take care.